city and we're displacing lower. That we about to sweep out these London lows. So this is where the bottom we just got a swept. So we also got an SMT with ES and Q at these lows. So ES is literally nowhere near. We hit the London low. So we just swept the London low. That's what we just hit. So we swept out London low. And with that sweep, we created an SMT, right? Which is NQ took out this low, right? But ES did not take out this low. Right, so now we could be expect. So now we already got a sweep. So market open and literally just immediately just went all the way down, right? All the way down. So remember we got the accumulation stage. It's accumulating orders. It's just going back and forth, right? Then we manipulate lower, which is the AMD model. We manipulate lower, right? Sweeping out some sell side. Now we just looking for the distribution leg back up, right? That's when we could get the bullish order flow. But this is when you want to wait and be patient, right? You don't want to just anticipate like how I was making the mistakes last week. You want to be patient and just follow proper bullish order flow. He says so. So you expect price to be yep, 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 yep. Correctly, correct, correct, correct. So the first, so now if I'm expecting to have bullish order flow, right? This is what I'm expecting, right? I would be expecting, right? Anything that's bearish to get disrespected, right? That's why I said the first thing I'm looking for is this bearish fair value gap that got created right here. I'm expecting to once it gets back above it, right? Once it get back above it, and this is a bullish, this is a bearish order block also. So we got the two bullish candles, and then we got aggressive move closing below this low wick, right? So this is a change in state, aka order block, right? So once it disrespect this right here, I want it to close outside of this inverse to validate this as an inverse, and then to use it again as a retest to go long. So I'm looking for actually lack of displacement to the downside right now. So I'm going to switch this from a SIBI to a inverse because that's what I'm expecting. And this is actually coupled with the first percentage fair value gap. So this inverse fair value gap is actually a big key level because it's coupled with the first percentage fair value gap. Right. So this is basically the first fair value gap that got created after 9:30. All right. So let's see if we get some bullish order flow right now. We got the sweep. And remember the first change in the state, right? So you're looking for a way on it to make the first bullish order block, right? So you have these two down close candles right here, right? I'm looking for it to close above this wick right here to validate this first change in the state of delivery, right? I should have just went live on YouTube so I don't have to edit this. price action do what price action do. So I want to just say some certain things. So remember, to be a profitable day trader, right, you have to master the four key components, which is the first thing is you have to master being patient, right? You have to master being patient. The second thing you want to master is actually becoming disciplined, right? So it's patience and then discipline, right? The third thing, the third thing you need to become a profitable day trader is risk management, understanding your risk management, right? Understanding that you want to take at least a 1.5 R trade. A 1 R trade is decent, not it's not bad, but it's not a great, right? Because let's say out of 10 trades, right? Out of 10 trades, I'm doing a 1-to-1, so I'm risking $100 to make $100. So let's say I take 10 trades and I lose five, so I'm basically at break even, right? Because I won five and I lost five, all of it with the same money, $100. So I basically didn't lose no money, right? But let's say I was doing a 2-to-1, right? Which is I'm risking $100 to make $200. And with that same thing, if I lose five and win five, I would still be profitable, right? So that's why it's important to have a good risk management. And then the fourth thing is a high quality setup. That's the fourth thing you want to have, a high probability setup. So we got the first change in the state right here. We got this down close candle. We got an aggressive close above that, leaving a fair value gap. So that'd be nice. I want to see a close outside of this inverse, and then I would actually be expecting this zone, this bullish fair value gap right here, to get held as a breakaway gap, because I'm not really, because once it closes above this inverse, I'm not expecting it to come back down to this breakaway gap. So I'm expecting it actually to not be mitigated. So we about to get the close right there. So we got a nice close. I want to see it come down. So I want to see it. So remember about what I said about bullish order flow, right? You want to see it stay in the upper part of fair value gaps. I'm about to get into my long right now. Be patient for a second. Let's wait and see. Because remember, high probability, high probability fair value gap. The one that you know you're on side. Why is not letting me jump in? For some reason the trade is not. It's not letting me jump. Oh, there you go. It's kind of late. Alright. So like I was saying, the good fair value gaps, right? The one proper order flow, right? Proper order flow. You want to see it stay in the upper part of. You want to see it stay in the upper part of fair value gaps, right? So what I mean by that is, you see how it closed outside of here? I want to see it stay in this upper part here. That's letting me know that where I'm on side and I'm on the right side of order flow, right? I don't want to see it come disrespect body counts and close it down here. I want to see it stay in the upper half and displace away. Now, I can allow it. I would allow it, some of course it to come down here, but it's not permissible. This is not what I'm looking to see. All right, so let's see. So I jumped in. It filled me in way up here. My stop loss is literally below this breakaway gap. So I'm allowing it. So I'm gonna allow it, even though I don't want it to come down here, right? But you never know what price is gonna do, right? So if it do disrespect this bearish, I'm sorry, this inverse value gap, I would allow it to come into this breakaway zone. But if it do come down here, now I'm like, damn, that's not really what I want to see, because I want to see it respect this inverse, right? But same thing, this is the first change in state because we never had a retest, right? We never had a retest of none of these zones, so this is the first retest, right? So I want to see it actually. If it comes down here, I want to see it stay in this upper part, just how I explained up here, right? I want to see it stay in this upper part, leaving this lower bottom part, right, as the unmitigated zone. So so far you see the wick, we had the wick came all the way down and it dug into this bullish fair value gap because we do have a bullish fair value gap right underneath this inverse. So we actually have two fair value gaps. We have this one here. This one, and then we have the lower one right here, which is the breakaway. So you see how, when I mean by good order flow, you see how it came inside of here, but you see how there's no body closes in this lower half. It's only wicks. All of the bodies are in this upper half. That's exactly what you want to see. So we got these equal highs literally right here at 870. Let's see what we get. So on this trade, this risk to reward trade, let's look at the risk to reward. Literally filled me in way up here. So I got my stop loss literally right below this breakaway. I'm risking about 36 points. That's a little bit out of my realm. I like to only risk about 30 points, but I'm targeting way up here. I'm targeting 66 points. So this is actually a 1.8 R trade. Damn, price came all the way back down here. Oh, so as you see here, price literally came all the way back down. It literally, it literally hit my stop loss, but it didn't take me out the trade. It literally hit my stop loss, but so did you see what I mean? How you see how it came all the way down here and it closed below here? This is not something that I want to see. This is not what I want to see. This is not what I really want to see. Because remember, you want to see it respect these. You want to see respect the Buddhist P raise. Right now, it's literally not respecting the Buddhist P. It's put this inverse right here. Literally, it respected it for a little bit, and then it just went in. This was just went lower. So either I was too early because remember it never retested. So this inverse was the only zone it retested. That's why most what you're supposed to do, you want to wait for the change in the state out of this zone. You see how we never got the change in the state outside this zone, giving us the lower time frame confirmation. I got in off of just this one touch of the inverse because I didn't expect it to come down here. So that's something that I definitely got to get better with. So let me delete this inverse right now because I literally just disrespected this inverse. So this is another reason why sometimes everybody get stopped out right now. I got stopped out. I don't know why it's not stopping me out. I got stopped out. I don't know why. It came and stopped me out the first time, but then it just left me in the trade. So this right here was a 36 point loss right here. Let me leave it on the screen so you can see it. Trading right here. So first L of the day is okay because this is a play that I would take all the time. This is a play that I would take all the time. Now I'm realizing like, okay, you know what? You gotta be more patient, right? Because off of this inverse right here, you want to wait for the change in the state outside of the inverse, right? Which would be here. So you got these two down close candles. You want to see it close outside of this zone. You see how this zone down here, you see how we just displaced? We literally just displaced the weight, right? But on this one, we never displaced past creating a new change in the state. So that's why it's important to be even more patient. Just because it hit a certain zone, that don't mean you get in on a certain zone, right? You want to learn from our mistakes. You want to let it hit a certain zone and let it give you the confirmation to go long. That's why it's always better to be more patient than to literally anticipate. So let's see if price come down and take out these lows again, because this was it. So that's how I delete this. So that's crazy because that play is usually a bread and butter. So maybe the market want to go lower right now. Maybe it's waiting on news. That's another reason why people actually wait for news, because sometimes when you have red photo news, it can literally like price action could just not do what it want to do because it's waiting on news or it's waiting on a macro, right? The macro is literally from nine. Oh, it's right now. The macro is literally from 9:50. 9:50 to 10:10. So we're literally in the macro right now. So this is when you want to wait. You want to look for speed, right? Because the macro is literally going to start spooling and start looking for the liquidity zones, right? So let's see if it pushes up because I'm expecting to be bullish. But remember, if we trend too far away from the midnight open, we can definitely just have a trending day lower. But because we have these equal highs up here, we have so many relative equal highs. That's why I'm not expecting it to be bullish, but I mean bearish. But I want to wait for it. Like I said, it has to break above this new week opening gap first. So we went lower right here. It just swept out these lows, creating another S&T. That's probably what it's waiting on. It was waiting. It's probably it was waiting on the. It looked like it was waiting on the macro time. So we get another sweep. So let's see if we can get some bullish order flow outside of this. I've just been taking so many losers, bro. That shit is crazy. I don't think I've ever lost this much. Of course, in the beginning. In the beginning, why did you lose so much, bro? I'm talking like this year. This like the start of January. I just been on a little run. Like this last 2 weeks, bro. I just been taking. That's alright though. Cause the losers have been small. That's the key. You want to lose, so you want to make the most mistakes when you're trading small capital, right? That's why one of my mentors was like, bro, you want to make all the mistakes when you're early, like when you're not trading with a lot of size. Because let's say I'm only trading one or two macro, like this trade was just four contracts, but this was a paper. This was paper trading. This was paper trading right here. This wasn't even real money. This was paper trading right here. So because I'm waiting, so you want to pick and choose when to trade real money, when not to. Because if you only trade it on the live account, you're gonna take and then if you ain't fix your flaws, if you ain't fix all of your flaws, you're gonna literally prone to take bad trades, right? So you only want to take high probability trades on high probability days on your live account, and any other bad trade, because you know we sometimes you just want to take a trade, you just wanna like you just itching to take a trade, especially low probability trades. Either train yourself not to take those plays or just have a dummy account, right? I've been taking a lot of L's. Why would I continue to trade on my real money? Obviously, something I'm doing is not working, right? That's why you want to wait until you start making more money, get more confident, and then you can actually go back, right? So we got the sweep. I feel like I was supposed to explain something else before. I forgot. I think I got off track. But the macro, we got the sweep right here. We got another sweep. Remember, no sweep, no trade. Now we got the inverse. So the first change in the state will be right here. So because I'm bullish, I'm expecting this bearish fair value gap to get hold as a inverse, right? Same thing before, like the first play. You want to see it come back into this zone. But unlike this breaking through, I want to see it hold. 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 1 second. Go give me some water. Hold on. Of course, it's gonna pop up when I walk away. All right, so we got the close above the inverse. So this will be the first. This is actually a breaker. We have low, high, lower, low, higher, high. So once it closes above, I'll be potentially getting to my long. I literally had on the wrong headset. So we got the inverse. We got the close above the inverse. Right. The change in the state is literally will be right here if it closes above this zone right here. So this is where I could potentially get my long at, and it's a bullish breaker. We have a low high, lower low, right? Literally about to create a higher high. This would be like a lower time frame market structure shift, right, on a lower time frame. So yeah, I'm gonna get into my long. Let it come down a little bit. All right, so we long here. Oh, I forgot it was news at 10. I keep forgetting about news. Oh my gosh. It's news literally right now at in 1 minute away. Oh snap. Well, this paper trade anyway, so let's see. My stop loss is literally right below this inverse fair value gap. But see, this would be the same trade that I would take on real money. That's the thing. Because I've been losing. So you say, you know what, let me paper trade for a little bit, get my flow back right. Once I start actually becoming back profitable, like start getting my confidence back a little bit more, then I could just go back to real money. Right. But I really just need like just a couple more trades just to get my flow back. So we got the sweep right here, right? We got the change in the state right here. We got the inverse value gap right here. So we have another bullish breaker. So we have this small bullish breaker to this other breaker that's right here. We have a low high, lower low, higher high. Just like the first one, right? Right here we have this low high off of our initial entry, low high, lower low, higher high off of this one. Right, now we have this one. This low, high, lower low, higher high. Right. But you want to wait for it to close outside of this zone. Also remember you want to see down close candle support price higher. So right now we actually above the change in the state. So let's see how far down. So it looked like news really didn't do nothing. It's already 10 o'clock. News ain't really affect too much. So we got the sweep. We got the inverse value gap right here. Closing above, validating it. We got the change in the state right here. Once it closed above, you saw it came down. That's why I got my long, ran up, right? Leaving this small little inefficiency right here. This is a bullish breaker right here. So we have multiple support zones underneath us. Stop loss literally below the inverse fair value gap. But just like before, your stop loss can be literally below this breaker right here. So let's draw out this higher time frame breaker right here, which will be the last bullish candle. It'll be this last bullish candle right here. Boom. So I'm extended through. You want to see it close outside. So right now we're looking good. Down closed candles are supporting price higher. So it looks like we about to hit the 830 open. So we just swept out those highs. And ES is aligned with the price action right now, so we're pretty good. This should be a nice rally up. So it looks like we're about to get the close. Be more patient. Once you close outside this breaker, I will bring my stop loss around break even. And my target, I'm targeting. So we have so many liquidity zones. My main target is gonna be way up here at these triple highs at 24,974. I think that's all-time highs. But I'm gonna sell some. I'm gonna sell some at these double highs. I'm gonna sell my first sell at midnight open, right here, and then we have these relative highs up here at 869. Nice little trade, right? I think we up about 28 points. We literally just made back that loss that we just took right now. So you see how it barely closed outside of that zone? That's not what you want to see. You want to see it. You want to see it literally aggressively close outside of that zone, right? And remember what I said. So we really didn't get a close outside of the breaker yet. Well, we got a small little close, right? But remember, if the breakers are good, right, you want to see it stay in this upper half. Just like we spoke about, you want to see it stay in here. Any inefficiency that's good, you want to see it accumulate in the upper half, and then you want to see it wick in the lower half. No bodies in the lower half. You see what it's doing right now? That's not what you want to see. That's not what you want to see. What it's doing right now, that is not what you want to see. That's why sometimes you actually want to like take some, like that's why they say you want to leave some runners, right? Because it hit this little small buy side, right? But that's not my target. That's not where I'm reaching for. So it's okay. So if that was your target, then that would have been a nice literally, liquidity zone. You could have just sold some. Right, but we're gonna let it run to see if we can at least hit this midnight open. My stop loss is still below this inverse, right? I think I was risking. We're literally back at my entry. I'm risking what again? 36 points. So I usually risk 30. I'm risking 36 because that's just where my stop needs to go. So you see how so you see what I'm saying about disrespecting the breaker? That's why that's why sometimes you can actually just like mitigate, just get out of the trade or sell some, because once you start seeing it disrespect the lower half of bullish PDRAs, that's not what you want to see. That means it's probably going to retrace back lower. So you might as well just start securing some. That's why they say you want to secure at highs, right? Because you're being too greedy. You want to let it keep running up. So we disrespected this bullish breaker. We did sweep out these highs, but look like we're doing a mean pullback. My stop loss is still below this fair value gap, this inverse fair value gap right here. So let's see if we can get back above. So we pulled into this zone, right? Same thing. I want to see it stay in its upper half. I want to see it stay here in the upper half, in the upper half, in the upper half. We haven't had a good example today of price action doing that. But let's see if we can get it with this example, because I'm literally not expecting this my stop loss to get it, because if it literally take me out, that's is literally disrespecting everything that it just created, and that means we're literally probably I'm literally on the wrong side. It's probably not bullish right now, or it just want to sweep out some more things. Like you never know what price is really going to do. But when you learn how to read order flow, this order flow price action, it could give you a good indication of what price wants to do, because midnight open is above us, right? So either we're going to leave the midnight open. If we just leave the midnight open and never return back to it, it's going to be either bearish right now, because midnight open is above us, right? But if you're bullish, you want to see price use midnight open as a magnet, right, to push us back to midnight open, to break above it, and to keep going higher. That's what I'm expecting. So let's see what's going on. I'm down. My stop loss is literally $360 right now. I'm down $200. So the first trade, I took like a 26 point loss, and this 36. So this is basically 236 point that I could potentially lose. So 36, that's about like 80 points. So you see how my losses are small. It'd be like, so 36 points is a bigger loss, because usually it's like around 30. 20, like around 20, right, to 30 points, depending on how many contracts that is. You see what I'm saying? So that's why that's why it really makes no sense. Don't over leverage until your time. That's why you want to actually master one contract first. Because the same way how you can lose one trade, you can lose, and with one trade, 36 points would be what times two. That'd be $66. So if you got if you got one contract and you lose this same 36 points, that'd be like around $66 to $70, right? Because each point moves $2. Each tick moves 50 cents, right? So if I lose this $70, and let's say I had 10 contracts, it would be 700, right? If I had 20 contracts, it'd be almost 7,000. Right, so the same way how you can make a little bit of money is that's why it's no point of me over leveraging, because the same way how I can make $200, but $20 is the same way how I can make $200, and it's the same way how I can make $2,000, and that's the same way I can make $5,000. So there's no difference. It's just risking more money. It's just a bigger click of a button. That's why you want to actually just master one or two contracts first, and then just start scaling up. You want to master the strategy. You want to master trading first before you start over leveraging, because losers, I don't care what nobody say, losers come with this shit. The thing is that the best traders, they just lose less. So that's where we're trying to get to. We're trying to get to the part where we're losing less. All right. So we hit this zone. Like I said, I want to see it respect the upper half of this PD array. So far, it has been respecting the upper half, and you see why I don't move my stop too early, because if I were to move my stop loss too early, it would have came and took me out. That's why I said I'm risking 36 points. Usually it'll be 30 points, right? Usually it'll be 30 points, from 20 to 30, 15 to 30 points. That's my little comfort zone. But because of where I need to put my stop loss, which was, if it's bullish, it should still respect this inverse, because this is the first PD array that got created on this sweep move up. So if we're still bullish, we should respect this zone. So that's why I left my stop below. And if I would left it under 30, which were 30 points, was literally kind of above the inverse. So I needed, sometimes you want to give it a little bit of room. So right now it's holding the upper half of the inefficiency. Let's see if it comes and stop me out, because that's what it's been doing lately. Yeah, hold it for a little bit, and then just like look like about to come get me right now. It's playing with me. It literally went one tick to my stop loss, and then it went back up. Like I'd rather it just hurry up and come get me versus playing with me. Hurry up and let me know I'm wrong, so I can fix it, so I can figure out why I went wrong and then fix it. But honestly, you have to to really realize where you're wrong at. You have to wait to after the moves happen, right? Because remember, hindsight is 2020. So everything right now, if I get stopped out and it just keep going lower or higher, everything right now is just like a damn. I'll just be a guessing. I'll just be assuming. Come on, Herbert, come get me, bro. Herbert, you right there. I just be assuming. So I will have to come back. That's why I do majority of my trading. I mean, I do majority of my journals, majority of my like looking at the market after the market is done. So like basically when I come home from work, cause I gotta go to work right now at basically in like an hour and a half. So and then when I'm at work, I look at prices. I'll be looking at prices also. So sometimes I could be able to take a trade at work also. But that's when I'm at work later on. That's when I can actually go back and look at the market and see what it actually did. Why did it disrespect? Why did I lose my trade? Why all of these things? And that's what makes you better, bro. Honestly, that will get you better. Consistently doing the thing, right? Remember, in order to have what these successful traders have, we must do what these successful traders do, right? That's when the be do have method. Right? You have to become the person that do the thing to eventually have what one is chasing. So that's why I just consistently keep coming here every day. Just trying to get better. That's the whole goal, man. Getting better. Unfortunately, hasn't been working in my favor, but all work works, right? It's either working on you or it's working for you. When something is not working for you, that means it's working on you, right? You have to figure out why isn't it working, right? And then that's when you have to start aligning things to go work in your favor by studying more, figuring out, okay, it's not working right now. Why isn't it working? Maybe I have to learn something new. Maybe I have to find me a new mentor. Maybe I have to, you know what I'm saying, lock in more. Maybe I have to, whatever, all of these things. That's the part. That's when they say you have to love the process. That's why if you ever like, that's what they always say that you have to love the process. It's because I realize it's the process of becoming the person. That's where all the gems are. That's where all of the game is. You see what I'm saying? But right now, it didn't come stop me out. Literally one tick away. That's crazy. Literally one tick away from stopping me out. But let's see what's going on. Right now, we're doing a lot of up, down, up, down, up, down, back and forth. So we're literally displacing away, but we're in still the same range. So oh, I forgot to delete the first percentage fair value gap, which is right here. Mm-mm-mm. Let's see if we get back above. So this breaker did not work. So if you go look at the breaker route, have a low high, lower low, higher high. You see how we just lack displacement. That's what's the key. That's why it's just not the play. It's just not. It's multiple things that make the plays work. Right? It's called confluences. Multiple reasons. Why should this play work? So you see, before it ran up, it needed to come down, sweeping out. Remember, the market don't want you. The market do not want you to take this ride to the top with us, like with them. They don't want you to make this money with them. So they're gonna do everything in their power to stop you out of these trades before these things run. That's why risk management is really important because you got to be able to stay in the game. Because you start risking too much money, you start losing too much with a bad risk to reward, or with a bad risk. When the price action really start running, it'll run without you. Cause now you got no more money in your account. So hopefully we could get back above this first percentage fair value gap. Uh, you see why? So I just want to go. I just want to go back talk about that one more time. This is why I don't worry about my stop loss, right? Because I just put my stop loss where it has to go. See what I'm saying? Because of the way I trade, it shouldn't be no more than 30 points, right? The way I trade, it shouldn't be no more than 30 points. But because sometimes you have to give it space, you have to let trades breathe sometimes. You just got to put it where it got to go. If I would have been picky with this stop loss, I would literally got stopped out, as you see, one tick away. One tick away. So you see, we are doing a lot of back and forth, back and forth, back and forth movement. So what I'm going to do to mitigate this loss, I don't want to see it come back down here no more. So I'm gonna bring my stop loss literally right here below this bearish candle. Cause like I said, the way I trade paper money, the way I trade real money, I don't switch it. So because you see what's going on, we're literally back and forth. We're literally back and forth, back and forth, back and forth. I'm gonna actually get out this trade because now it's giving me a chance to get out. Damn, do I really want to get out this trade? Yeah, I don't really like it. Too much back and forth movement. All right, I got out this trade right here. I actually made $7. So it gave me another opportunity, right, to mitigate my loss, right? Because remember, what's a high resistance market, right? When we're literally trading in the range. Look what's going on right now. We're going up, down, down, up. So you see how it's sweeping out this high? You see how it sweeps out? Price sweeps out this high. Price swept out this low. Then what happened? Price swept out this low again, swept out this low. And then look what happened. Price, so it's doing too much back and forth. Remember, if you're trading, remember, this is different between a high resistance market and a low resistance market. And if you go look at, oh my gosh, I just looked at ES. Look at ES. Look how, look at ES. Look how back and forth ES is. It's literally equal. Look at NQ. Let me delete this little. Look at that. Look at that. They're both literally back and forth, back and forth, back and forth. This is a high resistance market right here. High resistance market. We want to trade in low resistance market. Right? We want to trade like this. Then sweeping out this low. Then we start doing bullish order flow. See what I'm saying? So it looked like we was getting decent price action at first, but then so let's see where we at. We ended up pulling back a little bit. So good thing. Let's see. I want to see if we start respect, because obviously we're not respecting nothing right now. But let's see if we respect, because this inverse is still holding. This is the down close. This order block is right here. The most important, the most sensitive part of the order block is from the high wick to the opening price, which would be right here. So you see how it came into it right here. You want to see it create another change in the state outside of this zone. So you want to see it close up above here, validating this. But right now we're just doing a lot of back and forth, back and forth, back and forth movement. I don't really like that. So Let's see. I want so for me to trade right now. For me to trade, I'm delete it. For me to trade, I want to see us. I want to see a sweep outside of this zone, and I really don't want to see it return. Right. So I want to see it leave this zone and then like literally leave this whole zone. So look like right now we are getting that change in the state. Remember I said it came into this down close candle right here. So you see the high wick, and it's coupled with these down close candles. You see how it came in. You see how it stays in the upper half, right? It don't have the willingness to go to the lower half. Runs up. Now you're just looking for the change in the state, which was right here, to expand. Because around 10 o'clock, 10:30, we start getting bullish order. I mean, good order flow. But you see, then again, this high is literally right here, and then we still did not create the change in the state, right? So we literally have no displacement. It looks like it's just staying in the range. It's just staying in the range. So you want to wait for it to leave the range, retest the upper part of the range, and then to kind of like, but looking like this morning's session, we just looking like we're gonna have bad price action. I knew we were gonna have bad price action once we actually this first trade ain't work. That was skeptical, and then it came down and swept it, and then the second play ain't work. Once the second play ain't work, I knew I was like, oh yeah, nah, something is up. It was red for the news. Then you saw red for the news really ain't do nothing. Red for the news really ain't adding the volatility. Then we went on the macro. You see the macro. We thought with the macro. You see the macro. Look what the macro did. The macro swept out this low, and it gave us. So remember, we was in this trade that was at this high, right? We just was speculating it to go higher, and it literally never reached the midnight open. So when prices don't reach the opening prices, it's signs of weak. It's signs of it being weak, right? This 8:30 open, it got real close, literally 2 points away from the 8:30 open. Never came back to it, right? So that's when I was like, oh yeah, man. When that second play ain't work, yeah, something was up. So right now we're literally in consolidation. So let's go to a higher time frame. Let's go to a daily. Let's see where we're looking at. Let's see how we look at right quick at a daily before we get off. So we literally are it's literally an inside day. Oh no, we took out this low. We took out yesterday's low. Yeah, we took out yesterday's low. As you see, if you draw yesterday's wick, you see how price don't have the willingness to get to the mean threshold right now. And then this zone here is a new week opening gap. Oh, I forgot. I didn't even see this new day opening gap right here. This is an inefficiency. This day close right here, open right here. Extend that through. Yeah. So it looks like probably wants to go lower, but it's still consolidating right now. Anyway, so I'm about to get off right now because, like I said, price is literally going back and forth, back and forth, back and forth. We just came back down again. So a lot of learning we did here. We took a little small loss, right? On the second trade, we was able to basically get out at break even. So take my little screenshots. Price literally looking ugly right now. Damn. Look at this 5-minute chart. Look at all this back and forth, 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 back and forth. That thing look ugly on the 5-minute chart. But alright though, I'm out of here, man. Hopefully we learned a lot today. Hopefully, we getting better. Just because you don't take no trade, that don't mean you're not in the flow of it. Sometimes not taking trades is trading. because you're being disciplined. I don't see nothing right now. You know what I'm saying? Or whatever the things may be. So take it step by step, take it day by day, continue to get better, and continue to become the person that do the thing to eventually have what one is searching for. Catch y'all boys on the next one. I'll be here tomorrow. And I will still be in the chat, so if you got any questions, you can stay right into the chat. I will still be updating the chat as we go. So let's get it. Catch you on the next one. I'm out of here.